Hi, this is Bob Iaccino coming to you from the CME Group trading floor in Chicago, talking futures in the currency space. Let's talk euros. Two-day rally in the euro currency, first two-day rally that we've seen since April 13th. That was a Friday, April 13th, and then a Monday, April 16th. So it was really a two-session rally, to be technically correct. But the rally we've seen isn't really supported by that much. Most of it seems to be a bit of a pullback and a response to the weaker dollar. One of the things we have on the sort of negative side of the ledger for the euro is a death cross. There was a confirmed death cross in both the cash and the futures market this week. And that death cross tends to, well, it's a bearish signal. It's when a longer term moving average crosses above a shorter term. In this case, it was the 200-day and the 50-day. Again, we got it in both the futures and the cash. So that death cross is something that traders will pay attention to. But quite frankly, when you look at the results of the death cross, it's not a pattern that gives people a target. There's no estimate as to how much lower we go after a death cross. And when a death cross does happen, we tend to have a reversion to the area where the cross took place. So a rally. We rallied up today to about 119.71 and change, as well above the levels below 118.50 that we saw earlier in the week. That rally will probably continue for a little while to sort of confirm the pullback to the breakout. The death cross is a breakout pattern. Just like other breakout patterns, you often get a pullback, and then a second dip is actually the one you should be trading. Having said that, death crosses are not very reliable. They're more for the media, but you're going to hear about the death cross in the euro currency at some point. Then on top of that, I mentioned the dollar weakness. We've had 2 days of dollar weakness completely correlated with the euro, obviously, and some of it was off of the Fed speak that we saw today. The dollar weakness was pushed even lower when St. Louis Fed President Bullard said that the Fed doesn't need to raise rates any more than they already have. He says they're at the neutral rate and inflation has not run away. It's either at or below target by most measures. And this pushed the dollar a little bit lower, pushed longer term yields higher, and we're seeing a flattening in the treasury curve between 2s, 10s, and between 5s to 30s. They're actually at cycle lows in terms of the amount of basis points in between them, 26 on the 2s to 10s, which is pretty low. So all of that weakening the dollar, which gives a little bit of a boost as well to the euro, although it's bound to be short-lived. If the US is slowing down their pace of rate hikes, the euro is going to do the same, the EU rather, is going to do the same, and they're actually at a slower pace already. So it's not likely that this rally lasts very long. It's probably a rally it's going to get sold into, but if we get above that death cross, that'll change a lot of minds. This is Bob Iaccino talking about euro currency futures from the CME Group trading floor in Chicago.